Hey everyone, and welcome to the PlantStock channel. So today I was planning to have a special video on Beyon Meat's earnings coming up now on Thursday, where they present their numbers for Q1. But we actually got some very interesting news that just came out like an hour ago on Yahoo Finance that has actually impacted the stock quite a lot. So I think we'll have to take a look at that first, and then we'll go into the earnings after that. But before we get to it, as always, I would truly appreciate an early thumbs up to help me spread this video to other people out there. And if you haven't subscribed to the channel yet, make sure to push that subscribe button and the bell button so you'll get notified every time. Thank you guys, I surely appreciate your help. So just an hour ago or so, there came out some news that has actually impacted the stock in a negative way, which we haven't seen for a while. It's actually under the 130s. Ticker symbol BYND at 127. So we can see that here now. So what is it that's going on? Well, apparently Tyson Foods has come out with a new product. Let's take a look at that here. Or two new products actually. And for those of you who don't know what Tyson Food is, it's probably one of the largest animal food-based companies in the US, if not the world. It says here Tyson Foods is a modern multinational protein-focused food company producing approximately 20% of the beef, pork, and chicken in the United States. So what they're coming out with now is two new plant-based options, which is going to be plant-based burgers and sausages ahead of the summer grilling season. So, and I know there's a lot of concern out there when it comes to Beyon Meat, especially from Tyson Foods being as large as they are, that if they start making more and more products and with their kind of capital, Beyon Meat is going to be very threatened. Not only Beyon Meat, but a lot of other plant-based companies out there. So that is the reason I would say why we see this reaction on the market now. We can see if we update it, if anything is changing. Yeah, but about 3%. It might go lower with in the coming days. I'm not sure. We do know there's a lot of volatility, especially when it comes to news like this. Personally, this is nothing I worry about whatsoever. And the reason for that is, as I've talked about before, that when it comes to the products, it's a huge difference. Again, Beyon Meat is the specialist when it comes to these kinds of products. This is what they've been working on nonstop for 12 to 13 years. The only thing they work with. An interview that Ethan Brown had just the other day, he stated they have about 200 researchers and scientists who only work with this. So I wouldn't worry about it, but I do understand that the market will worry about it. It doesn't mean that it's going to affect them long term. And just as a comparison, I was going to talk about this in tonight's video anyhow. But again, if we take a look at what kind of revenue and how much of the revenue that they put in R&D, it's about 8%. And it's up and down about 8 to 10% that they put on their plant-based food. And you compare it with other companies and you look at Tyson Foods. They put the least amount of research on their products. So that should actually tell you how committed they are. So me personally, guys, I am not worried at all when it comes to this news. I think, as Ethan Brown always talks about, competition is always good. It keeps you on your toes, but nothing to worry about in my perspective. But let's go back to my main video, what it was going to be about to begin with. And that is what we could expect from the earnings from Q1 coming out now on Thursday. So let's focus on that. And to begin with, as we know, it's been a difficult year for Beyon Meat, right? Rona has been a difficult problem for everyone, right? A lot of companies out there, but especially Beyon Meat, considering that what they have is it's divided the way they get their revenues, right? Basically, my understanding is half of their revenue comes from retail stores, right? And half from restaurants. And considering the year the whole world has had with pandemics, restaurants being shut down, obviously that has impacted the overall revenues for Beyon Meat. So that's something to keep in mind, right? So what is Wall Street expecting them to have in revenue? That's what's interesting right now. And first of all, we need to understand that it's going to be a tough comparison when you compare to last year's Q1, right? Year over year, because then it actually had a revenue about 141% year over year. And we're not going to see that now. Most likely not. And reasons for that, according to this article, and I think we know, is the pandemic, because in the beginning of the pandemic, people were stocking up. They were buying in things. They're putting food in their freezers and their fridges, worried about that they might not go shopping for a couple of weeks or months. So that was something that was good for a lot of companies, not only Beyon Meat, but that did maybe benefit them. But I think it's also because during a couple of years now, they have been putting a lot of money on branding and marketing, becoming well known globally. So I think that could have had something to do with it as well. But if we look at some key numbers here, what we could expect here is that the revenue for Q1 last year was 97.1. And as I said, about 140% change then. Huge, right? Now, the consensus of Wall Street doesn't mean that it's going to have those numbers, but what they believe is that it's going to be around 140 million. So still, better than last year, and about a 17% change in year over year. That's what Wall Street is expecting. Again, we don't know. And I think that's certainly fine considering the kind of year they've had. But obviously, it's not the kind of revenues we want to see from a disruptive growth company like Beyon Meat. That's going to make such a big shift in the world. I mean, probably we want to see 30, 40, 50%, 30% at the very least in the coming years from now. And I think we will see that and more. But again, it's been a special year. So we know. And if we take a look at the specifics, when it came to Q4 just recently, right, they had about 62 million in the US retail, 15 in the food service. Total in the US then was 77. And then we see the international retail, 13 million, which was huge, 140%. So again, still Rona, right, going on back towards December. Still, it went up about 140% international. And we're going to see a lot more of that, I think, especially now in China with the factories there. And in Europe, they're actually starting to sell a lot of their products at thousands of new stores there. So looking good there. And the food service, 11.6. And international total of 24.5. The total revenue then was about 109. So that was Q4. And now we're moving into Q1 again from the start. And we expect about 12 more million in revenue. And I guess to some extent that makes sense, considering that I don't think there's been any huge up in demand when it comes to these couple of months, since it's still been the pandemic going on. And they also in the article talk about the bottom line, basically what's left. Yeah, well, they're going in the wrong direction. They're not really making a profit. And we've talked about that on many occasions, why that is. Because this is a company that keeps reinvesting in the company, right? And we've seen that. We just took a look at that they're using about 8 to 10% in their R&D from the revenue they get. So obviously there will be a lot less for profits. That's the kind of company I believe in, because if it's a company that reinvests into R&D, reinvests into marketing, which is also something they talk about, that they're trying to find new customers, so they put a lot of money on branding. But also, let's not forget, it's the pandemic also that has been wreaking havoc. So nothing that is not heard about before, right? But if we take a look at the second quarter, we're going to find out about the first quarter now, of course, but the second quarter does seem, according to Wall Street anyways, to look much better. They expect it to be around 143.5 million, representing a growth of 27% year over year. So going definitely at the right direction. And I could definitely see that happening. I wouldn't be surprised if we'll see more, considering that the restaurants are going to begin opening up more and more, and also that people will take vaccines. So not only will the restaurants open up more, I do believe people are going to start going out to the movies more, want to have some dinner first. So I do expect that's something that we'll see. So definitely I could see this number coming in, if not even higher. So we'll just have to wait and see. But again, I don't really dare to speculate on a personal note on how much they actually got for Q1. Will it be around 114 million? Possible. Could it be more? I don't know. considering that Rona has still been wreaking havoc, right? It's not like everything has been better in January, February, March. So we don't know. The only thing I've been wondering about is the Chinese facilities, right? They have just started producing in those facilities, right? So they might take time before we see any real revenue from that. And I'm not sure, even to be honest with you, if we would see those kind of revenues in the Q1 report. So we'll have to wait and see. But I do expect that we'll hear something about it in the conference call now on Thursday. But down the line, I'm not nervous at all. And you guys know why. I mean, we're talking about the Mickey D deal on a global scale, Yum Brands, PepsiCo. And those deals, just because they've signed them, they're not going to start until later in this year. I think it was the last quarter, the last couple of months of this year. That's when these deals are actually start flying out, which means that the revenue potential they'll get then will be immense compared to now, right? So that's what I do believe a lot of people and institutions, that's what they're waiting for, to see those real revenue numbers coming in. And that might take another 6 months to a year before we see those revenue numbers flying up. And for me, I'm good with that because I'm long-term. Not sure about you guys. Guys, let me know down below. Are you long-term on this stock? I'm interested to hear that. And folks, if you haven't seen my video yet on why I think it's really good that a company like Beyon Meat keeps being pushed down when it comes to being able to invest more before they actually fly up, take a look at my video up here. But I think it's important that for you as an investor, try to keep cool now in the coming days because there could be a lot of volatility, not only from what we've seen now with Tyson Foods, but especially after their earnings, because traditionally, usually after a Q1, there is a lot of volatility. Last year, the stock surged 26% after first quarter results were announced. 26%, that's a lot. But then plunged about 20% following the release of the third quarter results. So we don't know what to see here, right? So just try to keep a steady gut and just try to remember that if it falls down more and more, that's just a perfect opportunity to invest more, in my opinion. And folks, if anyone out there are interested in trying a whole foods plant-based diet to see what kind of energy you'll get or how it will benefit you in your life, take a look at my affiliate link down below. Folks, that was it for today. I truly hope you got some value in today's video. And if you did, make sure to smash that like button. And if you want to get more information regarding Beyon Meat and other plant-based companies like Tattoo Chef and the Very Good Food Company, to name a few, make sure to subscribe and don't forget that bell button. And as always, this was not financial advice. These were just my own thoughts and opinions. It's important to always do your own due diligence and invest safe. Guys, have a fantastic Monday. Hope to see you soon. Peace out.